I went back to look at these same periods in the election years and all of this stuff, and basically the market goes bananas all the way until March. Yeah, I mean, I'm just thinking it's banana zone all the way through till March. I talk about this a lot. I think we've got 6 years to make as much money as we can right now.
Raoul begins by discussing the natural economic and political cycle that occurs around election seasons, highlighting how this impacts the financial markets. Traditionally, there is an increase in liquidity, a critical driver that influences market behaviors. With the debt refinancing peak, it's becoming increasingly essential to introduce liquidity to help manage obligations and drive economic activity. Notably, Raoul mentions that China alone has injected around $8 trillion in liquidity, which has not been fully recognized by the broader financial community. This is setting the stage for a rally as liquidity flows back into the system. Raoul points out that the election year typically fuels a banana zone rally, which is essentially a strong speculative run in the markets that lasts until around March.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Seasonally, it happens. Almost whoever wins the election. Using the everything code cycle, we're in the peak kind of debt refi cycle, so you need liquidity to come in. I actually did the maths in Global Macro Investor over the weekend. China's added $8 trillion of liquidity via both state sector and via M2. I mean, people don't realize. So liquidity is back. Everything was in place. And then we've got this other thing, which we'll talk about how the cycle plays out, but we've taken the big overhang off, which is like who's allowed to do what. And, that is a big deal. And there has to be a re-rating, not just on liquidity, but a potential re-rating of the sector. So it's a big deal. I went back to look at these same periods in the election years and all of this stuff. And basically the market goes bananas all the way until March. And then somewhere March, April, there's tax season, and everyone's going to have to pay Uncle Sam and Her Majesty or His Majesty, and they have to start selling a bunch of stuff. That seems to happen every time where you get a pullback, and then it's going to depend on global liquidity. If it's still strong, then we end up with a strong pump into the end of the year. If not, we kind of get something more like last time. But yeah, I mean, I'm just thinking it's banana zone all the way through till March. Traditional markets, they tend to sort of forward price it as soon as it gets the news. Then you get, a corrective period. But because the flows won't come until the new year, right? And we don't even have a new government in. So really the flows don't come until later, because you actually need to see the regulators. It's not like Goldman Sachs can go, oh, great, Trump's in. We're all free to do what we want. They won't. They will have to wait until we're given new regulation, etc. So it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends, because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in. If we go back to 2020, it was exactly this time that ETH started properly outperforming. It's again the same point in the cycle. And if you play through, and I wrote a thread on this yesterday, is ETH is where institutions will build, whether it's on layer ones or layer twos, but that's where DeFi is. That's where institutions are not going to get fired for. It's the kind of Microsoft of the space. So I do think as regulation frees up, ETH is going to get a lot more activity than people yet understand. So I think it's a good thing. And they've built it for scale. But the layer twos, if there's not much activity going on, then the price doesn't do well. But if you can start bringing the financial institutions onto this space, ETH is the most likely candidate for it at scale. Every time we get to this point in the cycle, Bitcoin dominance collapses. Risk-taking, and now with the new government, risk-taking is going to be rising. Also, the other thing that I found the main driver of alts versus Bitcoin, so i.e. the inverse of dominance, is actually driven by the ISM survey, business cycle. Makes sense, because if the business cycle starts going more positive, because it's been very lackluster, what we tend to find is that risk-taking increases because people's disposable income goes up, their businesses earn a bit more money, everybody feels a little bit better. And that drives the same as small caps versus large cap outperformance. It's basically the same trade. You see it in credit markets as well. It's all the same trade. So it's perfectly set up for that now. All of our forward-looking indicators suggest that the ISM from here starts climbing above 50. 50 is the really big signal for the alt season. I'm not sure it's going to be the biggest trend this cycle. I think we'll talk about it a lot. We'll see some speculative activity in it. By the next time around, we don't have a choice. We simply have no choice but to hyperscale digital ID, digital sources of truth, everything. And it's going to be a race. And it's going to be a race at sovereign scale. So, yeah. This is when I look at my forward projections of blockchain adoption just by using wallets. And by 2030, I get to between 4 and 8 billion wallets. And that's because it's going to come out of this stuff. This is a mega use case for Bitcoin, for blockchain, that people just don't understand. They still think it's meme coins. All of this is testing the big game, which is all of finance and all of the internet.
Raoul also discusses the role of artificial intelligence, AI, in reshaping finance and the labor market. He warns that we may only have a 6-year window to maximize wealth in traditional financial markets before AI-driven automation transforms the economic landscape. He speculates that advanced AI, or even artificial general intelligence, AGI, could disrupt traditional investing and asset management by automating decision-making processes based on extensive data analysis. This shift could significantly reduce the role of human analysts and traders, replacing them with highly efficient algorithms. According to Raoul, jobs that have defined the last few decades of finance might become obsolete within the next decade, leading to a paradigm shift in how wealth is generated and managed.
So it's currently a $66 billion market cap. I think this bull market, the whole space, will end up being 10 to 15 trillion, somewhere between that. So how much is Coinbase worth in that? I mean, it would not surprise me if Coinbase was worth $500 billion.
Yeah. That's crazy, that's $66 billion.
It's insane. It's so cheap.
Mental, isn't it? Yeah.
Yeah, considering the size of the market that's already there. And I see people do it. I see friends of mine do it already. They're in the bum trenches looking for the 500K. I'm like, please don't do this. You will literally not make it. You just won't.
But do it on a very small amount. Do it on a very small percentage of your portfolio if you have to, but don't let it affect your core positions. A lot of people who do that
just can't help themselves. They sell more of their soul and they keep buying more, and they sell more soul and buy more. Next time I'll get it right. Next time I'll be 100x. Before you know it, their soul pile is down 75% and they've made no money in memes. I'm more thinking of the actual contract itself. So, let's say it's a call option on Turkish government bonds, or that's just an NFT, right? It's straightforward. It can settle. You put that in code. The real issue is, it was the question that people asked me is, well, surely somebody who gets AGI just wins markets, right? And they're worth $10 trillion and we have to shut down markets. Now, okay, that's the exaggerated answer, but the reality is they're true. Is by the time we hyperscale AI agents and something closer to AGI, there's no place for us in this stuff. And I'm not sure what markets are then, because they're so priced on so many factors. I know people still think, but discretionary, macro, forward-looking stuff. I don't know that that's not going to fall as well into this whole AI pit. So, I talk about this a lot. I think we've got 6 years to make as much money as we can right now, because I have no clue what the world looks like, but I don't think we're going to have an opportunity in financial markets in the way that we do. I think we can earn tokens. I think, community-based stuff, which is what I think memes are testing, works. I just think the jobs that we grew up in, it's gone. It's going to be gone. 6 years. It won't. It'll just be in your speakers around your house. It'll speak to it like this weird mentor shit. We build science fictions called Hyperscaling. And what you do is you create a future that you've envisaged. And we will almost certainly do that. So we will just go, Siri, tell me this and do that for me and do this for me. But also, you see the robot dogs, and Mark Andreessen was talking about he's got 2 robot dogs already.
Yeah.
They are just the pointy end of the spear for the machine. We've already got Roombas. So we've got a robot that cleans your house. You'll have a robot that mows your lawn, a robot that tidies your house. We've already got dishwashers, which are robots that clean your dishes. It's not that big an ask for all of this to change. Tesla's going to be, your car drives itself. In fact, it generates you revenue by acting as a taxi when you're away on holiday, you're in bed. So, yeah, it's just coming so fast. And all of these payments, crypto rails are a damn sight easier than trying to get your Tesla car to have an account with, Cayman National Bank that requires your birth certificate of your entire ancestry before they even open an account for you and then reject you anyway. It probably starts to ignite the real meme coin season, the utter insanity season as well. Because if we've got this somewhere between 4 and 16 weeks of really dream risk-taking environment, people are going to go so far up the risk curve, it's terrifying.
Yeah. And
people just can't help themselves. They cannot help themselves.
He touches on how AI will permeate everyday life, creating new levels of convenience and efficiency. For instance, AI-driven devices might perform tasks autonomously, such as your car serving as a taxi while you're not using it, or household robots performing daily chores. Crypto and blockchain could serve as the backbone for these interactions, providing the secure and transparent infrastructure needed for such autonomous operations. Raoul concludes by predicting the financial system, technology, and our very way of life are on the cusp of transformative changes. He suggests that we're entering a period of insanity season in the markets, driven by unbridled risk-taking as people seek to capitalize on the few remaining high-return opportunities. He advises viewers to approach the coming cycle with caution, especially when it comes to speculative investments, as the heightened risk environment could lead to unexpected losses.
Please like and subscribe my channel.